pass you straight over to Tom. So actually in front of you, the screen you can see is a 20-minute of the S&P future. So Tom, over to you.
Yeah, hi everybody, Tom Williams here. I'm talking to you from Worthing, which is a little resort town, south coast of England. It's about 50 miles south of London. And everything seems to be okay, touch wood. Okay, so we've got the S&P 500 20-minute chart up. Now, there's no reason why I've put 20 minutes up. All these time frames work. So what do we got with the 20 minutes? Right. Well, now what's fairly interesting here is that you got a down move, yes. Right. Now the thing is with these down moves, has there been enough down move to attract professional money into the market? In other words, has it made the market vulnerable to one or more groups of professional people deciding they could put some money in there and perhaps turn the market round for a move up? Now what's happened here is, yes, we do have a serious widespread down bar. And look at that huge volume surge there. That's activity. There was a massive amount of activity on that bar. Now, there must have been some buying in there for the market to do that. There must have been some intervention. Professional money must have stepped in, especially as the next bar, 2 bars are up, look. Now, what's interesting is that on these markets, if you see these blue bars have got fairly high volume on them as they attempt to go up, then that is supply. So you have to be careful here. But the market did respond upwards. Now that here, what we're looking at is a potential setup for the future. If, for example, a setup would occur, if these prices here, where the cursor is now, fell back down to that level where we saw that high volume, which I'll draw that line on, look. There's the high volume bar, look. If we saw the market fall back down to that level, it's the level that's important, not the price, the level, and the volume or activity was low, then you'd have a setup for the upside. We don't see that at the moment, so you'd be pushing your luck if you traded this in any way at the moment. But the whole idea is to teach you how to recognize these setups and only trade a setup when you see it. Don't try to pick one out from the ether, as they say. Now the only query here, has this market fallen enough to attract enough professional money in? Admittedly, yes, there was definitely some intervention here, look. Widespread down, but there is an old saying in the market, when you see a widespread down, close near the low, on an increase in volume as it pushes down through a former area of support, could be potential weakness. So we have a double-edged sword here, so we have to be very, very cagey, and we would not trade unless we saw a setup which would be for the long side, is the market would fall down here somewhere to the level. Forget about the price and all the rest of it. It's that level. Then if the volume was low, then you'd expect higher prices. However, if you saw a widespread down as it rushes towards this level on a slight increase in volume, not heavy increase, then that could be bearish. So you have this tucked away in your mind and you're ready in case it happens. So you're not trading blindly here. It looks good, but has it fallen enough? Now Rita's here, and Peter. Rita's looking at the screen. So it would be great help to me if you ask questions on this chart, and I can answer. Got one?
On this chart, Edmund is saying, when you look at the bar forming as it happens, how do you determine if the down move is enough to make the market vulnerable? For example, at 120, could you point that bar, 1320, the volume is high compared to the previous bars, but then 3 bars later, the volume is much larger.
I'll pass you over to Tom, but just quickly to say, at that 120 bar here, Tom was talking about, has the market come down very far enough? Well, I would say that that move there is not obviously enough for it to suddenly shoot up necessarily. And Tom's saying that even though it's come down here, is that enough? Because in the big scheme of things, it's hardly, true that in the latest leg it's come down that far. And Tom was talking about this high volume here, that if you were to think about going long, you'd be looking for a test of that price where the market comes back down again at that level. So it has kind of done that, Tom. The close of that bar or the low of that bar here is here, but it's not. It's enough to move it up a bit. But Tom's saying a proper test is it goes up first, then comes back down and tests that area, and that hasn't happened yet. So I'll hand you over to Tom anyway.
What was the first question?
When you look at the bar forming as it happens, how do you determine if the down move is enough to make the market vulnerable? For example, at 120, the volume is high compared to previous bars. Then 3 bars later, the volume is
what's his name?
larger.
Edmund. Now, the human being's brain is very good at summing up the situation. And you can see on that first bar you were talking about, it hasn't fallen enough. Right? Imagine you're sitting there in your house. You know what it's worth. And the guy over the road wants to sell. Now, you're not interested in buying his house off him if he says, oh, I'm going to knock 5,000 off or 10. Right? Because it hasn't made the sale vulnerable to attract you. But what happens if we said, oh, I'm going to knock 70% off or 80? Would that make you vulnerable to be interested? It probably would do. It's the same thing in the market. These markets have to fall to attract professional money into the market. And they won't risk those huge amounts of contracts on the market unless it's favorable to them. And to do that, you have to have heavy down moves. And that first bar is nowhere near it, is it? Don't look at the volume, look at the price bar. It's just not down far enough to attract professional money into the market. So that's very important to keep that in mind.
Yeah, so it's just like the market trader on a fruit stall somewhere. He wants to buy everything at rock bottom price and sell it to you at a high price. So it's just the same with the markets.
On this chart, Craig's saying, do you need to see a close below the low of the high volume bar?
Sorry, what was that?
Do you need to see a close below the low of the high volume bar?
Do we need to see a close below the previous high volume bar? Not necessarily, because if they're buying on that high volume bar, then the the close would probably be up, if anything. But we don't use the close, we don't use a mathematical formula in any way. Everything is relative, if you can visualize that. Try to visualize professional money attempting to put in hundreds of thousands of contracts, bullying their way into the market. Right? And only do that if the market is vulnerable to go up or down on their huge amounts of trades that go in.
Okay, Michael, this is a question from Michael saying, suppose the ultra-high volume possible climactic action bar, which I assume you're talking about a bar like this, had crawled up on massive volume to close in the top half of the bar, and that happened today apparently with Royal Sun Alliance, and it went into new low ground. How would you interpret a bar like that? I'm assuming something similar to this. Okay, suppose you have an ultra high volume action bar that had crawled up on massive volume. Well, he's not saying whether is it an up bar or a down bar, Michael, but it's on massive volume, Tom, to close in the top half of the bar. I'm just waiting for his response. It's important to know if it was an up bar or a down bar. Well, we can't look at that. There's no response, so we'll come back to that then. Louis would like you to look at the pound. Oh, right, hang on. No, quick. Let's stop. Don't move. Initial 20% drop, closed 7% down.
Right. When you see that, that would indicate that professionals were moving in buying that. It has to be a down bar. You've got to keep in mind there's a big difference between an up bar and a down bar. If it was on an up bar, it could be supply hitting the market. If it's a down bar, it could be buying hitting the market. It's very, very important to keep that in mind. But the way you've described it, unfortunately, we don't have a chart, do we? No. We don't seem to have that chart, but it would indicate buying and making that stock strong.
Pound, Peter. The pound.
Time frame.
Oh, it doesn't say. So.
Okay, Louise, we've got a daily chart of the pound future.
Well, we can see the pound is trending up with these trend lines. On saying that, we can see there's a certain amount of supply here, look. There's a surge in volume, and we've actually come up with an indicator.
Up thrust?
Up thrust, right, that means supply. On that weakness, the market drifts sideways, look. So there must have been something in the indicator. No demand, look. That's no demand, narrow spread. And that's why it's come off these few bars. It doesn't mean to say it's now bearish, it's going to fall tremendously. It just means there's some weakness here. And it could easily drift sideways until it reaches this lower trend line where it will receive some support. But there's weakness there, look. between those 2 arrows there was definite weakness there. So you're not going to rush in and buy that at the moment. There's no apparent setup. Do you want to put a smaller time frame up?
Yeah, an
hour, do you?
See that? That's bars.
That's an hour, is it?
Yeah.
This is now a chart. Yeah, so there's the sort of weakness. And that looks like more weakness there, doesn't it? Very often the key to knowing whether this is strong or weak are these blue up bars. If there's high volume on these blue up bars, that means that supply is present. We all know that the red down bars, if the volume is low, the pressure's off. But if you see these blue up bars, it means there's selling going on. I don't like the look of this here. This probably is going to continue to be weak. There's no setup there that you can get your teeth into and trade. You must be patient and locate a setup before you trade, otherwise you can lose money.
Edmund comments on that bar, Tom, that you said you don't like the look of. He said it looks like a gotcha bar, as Gavin described that bar.
Well, I suppose in a way it is a gotcha bar, but all the wide spreads down like that close on the low will be there, generated by the floor traders or whatever. A proper gotcha bar is when you have clear evidence of weakness in the background. Close by, well, I suppose it. Yeah, it looks a bit dodgy there, look. There's that. I said to you, if there's high volume on these blue up bars, that's serious. So we do have that there. So that very well could be a gotcha bar. Professional money are fully aware of this. Weakness here, supply though, there's a green bar there. Right? The volume's too high on the upside. Then it reverses and bang. That very well could be a gotcha bar.
Can't you put it in the, type in the Dewberry? Oh, right. Okay, David is asking for UNG 1 hour. That's natural gas ETF. We don't think we have data for that, but we can put up the daily chart. We can do that. No. We'll try. We're having a go anyway for the 1 hour. No. Yeah, he wanted you to comment on a particular bar on the 1 hour chart. I'm afraid we can't. Gavin will have Gavin's doing his closing bell later on, so he'll have the data for that.
That last bar looks weak, doesn't it?
Yeah, it's too far today.
That last bar looks very weak. Yeah, it's a daily chart, so it's yesterday, look. It's an up bar, very narrow spread, massive volume. That's a sign of weakness. But you've got this fantastic bull move behind you. So the momentum is on the upside. It's going to take a lot to move that natural gas to lower prices. It'll probably go sideways for a lot. Could even have up thrusts and trap up moves, no demand. That's a fantastic move, isn't it? It's unusual, look, if VSA doesn't pick up the low. Shakeout scoring there. Something's happened. Something's happened. There we are. Now the problem with, we see this fantastic up move in hindsight, right? And we go back and I say, look, there's an arrow right at the bottom to buy, which there is. Right, not to mention this test here. But the problem with trading is that when the right time arrives to move into a stock and buy, you'll find you're not really geared up for it. You're not ready. I mean, this has been falling here. So why should you suddenly want to go long? It's part of the process of learning how to trade. Now here's much easier because here you have a clear test come shakeout. That's definitely a clear shakeout, look. But notice the volume is fairly high, look. So you say, all right, we'll have another test. And there's another test there, look. There's no arrow on it, but the volume's lower. But will you be able to see that as it's running live? That's what makes trading difficult. But right now, that market looks weak at the top. That's up bar, narrow spread, massive volume. And the market's certainly favorable to professional money moving along and wanting to short that, or certainly cover their long positions and short, because of that fantastic move behind them. It's acting very, very strong. Trends run longer than you think they will. And that could easily keep pushing sideways or up for some time.
Okay, we're just putting up the Nasdaq 15-minute for Grigory. This is the Nasdaq 15-minute, Tom.
Right, the Nasdaq 15 minutes. Well, immediately we can see quite a serious sign of weakness in the background. That is a top reversal. Up, down. What's this AP?
Supply coming in.
Supply, wow. It's really a two-bar up thrust, isn't it? The market's been marked up. And because the general index is acting fairly strong at that stage, it can stay up there to the next bar. And they reverse it, bang, down. This is a ploy to mislead as many traders as possible, catch as many stops as possible, and benefit their accounts, not yours. Two-bar top reversal. So that's immediately obvious. And that's why that's in the background. This hasn't gone anywhere. And it doesn't look as if it is going anywhere at the moment. There is a bit of a test there, but that's about it. I can't see a setup that I could guarantee it looked interesting. I would have thought this has to fall further before professional money will get really seriously interested in pumping money into this.
All right, folks, anybody got any more questions? Just type it into the questions box, either asking about principle or a particular stock. Gregory's typed something. Hang on. What does it say, Rita?
Okay, two questions on this. Well, one question from Krista is, would you go short on this chart? And Gregory's saying, I'm looking for shorts on a break of the bottom of the shakeout bar.
Where's the chart?
There you've got it. It's the one you just been talking about.
People are looking, saying, is there a short there at all?
No. I can't see a positive short there, especially with that test in the background. To me, it looks as if it's drifting sideways at the moment. If you push these trades, visualize something like that, you're going to lose money. The market has a very uncanny way of giving you a gut feeling of a direction you think it might go, and you can almost guarantee it's going to go the opposite direction. Now, exactly why that happens, I'm not quite sure, but it's obviously the combined effort of news, sentiment, and the way the herd or people act as a whole. Need some clever guy to figure all that lot out, like swarm behavior.
Just asking, what would you like to see to go short on? If you were to go short, what would you want to see first?
Well, on this chart,
Yes.
what I'd like to see is a nice up thrust. When they mark it up, the volume is clearly very low. It's probably marked up on a narrow spread and then quickly reverses. That would be a sign of weakness, because you've got that top reversal in the background, which you can see to your left on the chart. That's hovering there. That has not disappeared. There's been no action to nullify that move. It's there, causing weakness in that chart. That's what you're looking at. Okay.
All right, any more questions?
PM stock.
So
PM.
who's that writing that? I can't see.
Tadej.
Tadej. So he's asking for PM, which is a stock. Do you think that there was accumulation during the past few weeks? So let's get that up. PM. PM daily. Now, Tom, do you think, the question is, there's been accumulation in the past few weeks, which is along here, I suppose?
I can't see that, but it has fallen quite a lot there. Okay, put 20 out. Well, I can't say that's accumulation. I mean, you've got these down bars here which show weakness. But don't forget, when they are accumulating, they have to be very crafty about hiding their activities, because they're not worried too much about you, the public. What they are worried about, other professionals taking advantage of them. I mean, I was working for a syndicate. We used to sell like hell in the day on the New York Stock Exchange, and then overnight buy it all back. So that would cover their activity, so you've got to be careful. But there was some stopping volume here, by the look of it. Close in the middle, look. There's not a lot of supply there, look. The key is there high volume on these blue up bars? Not really, is there? So it looks as if it's just drifting sideways. But I would have thought if that's bullish, it would start going by now. It's been a long time thinking about it, hasn't it?
So, Tom, how would it look if they were accumulating? What would you be looking for along here if it was accumulation?
If it was accumulation, you'd have the stopping volume, which you could see definitely at the start here. You would have a serious down move. Whether that 2 bars are enough, is that enough to attract professional money in? Has that fallen enough to say, oh, look, we might have a chance here? You'd have a serious drop. You would have stopping volume like this, closing in the middle, right? And there would not be any increase in any volume on these blue up bars at all. And near the end, you would have what we call a shakeout or a springboard. If that was accumulation, what they do, they suddenly mark it down here. You may get an arrow and it rebounds quickly. Then that will immediately tell you, yes, that was accumulation. Does that make sense?
Okay, thanks, Tom. Michael was clarifying something he was saying about RSA, which was that stop, the UK one. I was inferring that the bar I described in RSA is not a shakeout due to trading volume of 103 million. Opened gap down, up thrusts to close the gap, then drops to the low. Stops out all the UK fund managers. So to be in a trade today is like the coyote sitting on a ski, gambling on catching the roadrunner. Do you want to say anything there, Tom? Or Peter? You do.
Say all that again.
I was inferring that the bar I described in RSA is not a shakeout due to trading volume of 103 million, opened gap down, up thrusts to close the gap, then drops to the low, stops out all the UK fund managers. So to be in a trade today is like the coyote sitting on a ski, gambling on catching the roadrunner.
That sounds a very interesting story. I like it. But whether it's true or not, I don't know. I need to see the chart. Do we have the chart? He may have it. But that's a very interesting story. And the way you described it, it does sound as if they're trying to shake the market out. But I don't like to comment on the interpretation of somebody that's telling me what chart looks like, because unfortunately when I look at the chart, usually I see something entirely different, or can do, or things that they seem to have missed. So I have to proceed with great caution. But that description sounds very interesting. And it sounds a good story. And it does sound as if they're trying to shake the market out. I wish I had the chart. You made me intrigued now. Is that it?
Right, this is TSLA for Chris. He says, can we figure out if we deal with accumulation or distribution at the current level?
Well, I tell you immediately, at the current level, they're certainly not accumulating. Because these, what I just tell you now, if you see blue bars with high volume on, right, that's bearish. And that certainly is, look, that's knocked that sideways. That's not good for higher prices. Although it has gapped up, and it could be absorption volume to the left somewhere. Could easily be some absorption volume. I would strongly advise you to tend to specialize, if you can, on certain areas. You see, that high volume and that widespread up bar might be pushing up through supply to the left, because apparently there looks like a top to the left here. And here in the background, we do appear to have a test on low volume, look. And that test is reacting to this red arrow, look. We've said this several times in the last few weeks. And whenever you see a red arrow and immediately the next bar is tested, that means it's going to go up. But I would say there's definitely supply there. But I'm saying that could be pushing up through supply to the left, and that could be absorption volume. And even here, these red down bars, that could be testing that. So that's not all that clear to me at the moment. That could easily be a sign of strength there. See, we've got this test right here. Looks like an area of accumulation just on the low here. Gap up through supply to the left is normally a bullish sign.
Okay, thanks, Tom. Chris says, thank you, Tom. TSLA is a tough one. Yeah. Ian is talking about RSA that we were talking about just now, for which we don't have the data. He says it was testing the high volume low during October 3. That's for those of you who've got that chart and that data. 3, yeah. Okay, Edmund would like you to look at TSN. That's a stock, Tom. TSN.
Yeah. Yeah, that's a good point, Tom. What do you think of that? Can you read that out again for the customers? It's an important point. Tom's replies to
Ian, I'm asked to repeat this. RSA was testing the high volume low during October 2003.
Well, you've got to be very careful with a stock like this. It's short of...
We're talking about this stock. The volumes come down, the prices come down on high volume. That UK stock we talked about earlier, we have the chart for.
All right.
Ian says testing high volume back in October 2003. What do you say about that in general? Going that far back, is that valid?
Usually not. Supply and demand Obviously, the further out you get away from the action, the live edge of the market, further away it gets away from past action, the less effect it has, which is quite logical to think about. I personally wouldn't look at anything seriously unless it was in the last 10, 12, 15 bars. Now here, this stock, we've got to be careful with this one we've got up, because obviously acting stronger than the index. Very powerful looking stock. Now admittedly, we're probably overbought. We've got here a sign of weakness suddenly appear. Up thrust, which is not very convincing. You've got a little bit of high volume here, look. On these bars, there was definitely a bit of supply there. And it's come off one bar. To me, that looks strong. I certainly wouldn't want to short that at the moment. I'd want some more convincing evidence, because its trends run longer than you think they will. And that's without question, it's trending up in a very serious positive way, look. Little bit of no demand at the top there. But it's acting strong with the index. You trade harmony with the index. And that's it.
Edmund is saying, would you go long with this stock? And Krista is saying, would you exit a long position?
Well, that's where your skill as a trader has to kick in. If I was long on that and I'd ridden that up, I would probably close it out. Why not?
Would you take a long now?
No. I wouldn't go long at the moment because that weakness is there and it's rounding over. If you want to go long on that, you have to wait for a more convincing principle to appear, like a proper test, where you see it's marked down, narrow spread, close in the middle, volume is clearly less than the previous two bars, then that's going up. But VSA is very good at picking the lows of these stocks. I'd be surprised if there's nothing at the bottom here. There's something here. Look. Test, there's a test, you see. But the thing is, are you ready? Are you geared up as a trader to go long on that? I mean, there's a lot of weakness here in the background. We've got up thrust, wide spreads down, high volume on these blue up bars. But here, it's just lack of supply, look. Would you be able to see that? But don't forget, professional money, they have to be very cagey when they're trading, so they don't want other professionals to move in on their act. And all that behavior is a skill in its own right, I suppose. I don't think they worry too much about the public. They're worried about other professional traders moving in on their trades.
Yes, GR says that the stock TSN, this one we're looking at, does look weaker on the half-hour chart, which of course we don't have that data, but just as a point of interest. Okay, any more questions? If you have, type them into the questions box for Tom.
We'll go across to the ES now.
Okay, let's have a look at the live chart.
Crude oil daily.
Oh, So he had a request for crude oil daily. There's a contract there, CL. Tom?
Well, and we can immediately see that the crude oil is looking strong. I mean, because here, this is definitely pushing up through supply to the left. There's not a lot of volume there, but there is a bit. Widespread up. They push through any obstacle to the left. They held the price up. Every time you see a red down bar, the volume is low, look. They may want to test this. They may come off a couple of bars or so, but overall that looks strong because of that. Yeah, as I'd be pushing through that top there to the left. Overall, that would look strong, but expect a couple of down bars testing if the volume needs to be low. Yeah. No. I'd wait for a test. You need to wait for a clear principle before you trade. It's no good visualizing, oh, that's going to go up and all the rest of it. Because the way the market works, you're going to be wrong. But you won't be wrong if you wait for a clear principle to appear. And the principle here, I mean, if it doesn't appear, too bad. You've got all these other charts to look at. Here, you'd only go long now if you saw a clear test. Down bar, narrow spread, close in the middle, volume less than the previous two. Then yes, then you go long. At least you're going long on a clear principle, which is bullish, a bullish principle. Otherwise, the market's going to get you. And preferably trade in harmony with the index.
Okay, so now we'll look at the live chart. The S&P future. Back to the 20-minute. So it's been steadily, well, I won't say steadily rising, but it's been slightly rising.
Right, well, you know, it hasn't changed a lot since we looked at it earlier on. There's definitely some stopping volume on the lows. Before you could go long on that, you'd want to see a test. In other words, somewhere here, down bar, narrow spreads, close in the middle, low volume. Certainly low relative to this volume. But to me, that market looks weak. The reason it looks weak, it really hasn't fallen enough or heavy enough to attract professional money to bulldoze their way into the market. Although there's a low volume bar here, it might go up for a bar. Yeah. Yeah, it doesn't look strong to me. I would just sit and, if you push the trade, you're going to lose. You have to recognize the setup clearly. And until you could do that, you're going to trade on some sort of gut feeling, and that was inevitably going to be wrong. Just the way the market works. Market seems to automatically give you the wrong opinion.
Yes, it's Peter here. Rita came home the other day, having seen Tom during the week, I think it was, and she was saying, Tom was saying how the professionals, they will always wait for a principle. They'll wait and they'll wait, and they won't just dive in because they fancy it. So it's a good principle. Another principle of human behaviour to bear in mind is that if you want to be successful, you have to do just that. You have to wait for the principle to turn up. And I think, Tom, you were saying that they would wait days and days, if not weeks and weeks, for they wait till it comes along. Tom?
Well, it often takes a lot longer than you think. I remember when we were accumulating stocks, there was one stock we were accumulating, it took 7 years to get the whole line in, enough sufficient for us to control the stock, to mark it up or down at will. It took 7 years. But they don't normally take that long. But it takes time sometimes to accomplish these moves.
Okay, we've got one more stock for Edmund. Okay, 2 questions. The first one is for Edmund. NLSN.
This is a stock, is it?
Yes.
Well, that suspiciously looks like pushing up through supply to the left. So that move there with that high volume could be bullish. Could be pushing through this top here. Sometimes these charts are a bit awkward because where they're made, they automatically size up to get the whole picture on the screen. And doing that, they may change.
He says it jumped to 45 today.
Oh, did it? Yeah, that could, well, they are. Yeah. That could very well be bullish, this move up here. And there's a test, look. Testing. But as it goes up, look, there's no heavy supply present. There's no high volume and up bars. And these red down bars, look, have got low volume on them. And that's why you say it's gone up today. That's why it's shot up today, look. It's testing here, look. Signal.
Yeah, it is a test. Yeah.
But that there is pushing up through supply to the left, which is bullish when they do that. Okay.
TSN, the one we had earlier, TSN on a weekly basis. Oh.
Tom, that's a weekly TSN.
Where are you going, Gavin? Okay. Sorry. Gavin's moving around the background. Sorry, what's that, Peter?
It's a weekly of TSN.
A weekly chart. Right. Cursor's not working, why is that? There it is, I got it. Well, certainly a bit of weakness there, look. Okay, so in that weakness there knocked it back, look. And if that's a weekly chart, it's been knocked back for some time, look. It's quite a long time there. Enough to shake a lot of people out. There's no selling pressure there, look. It's been rapidly marked up, look. Attempting to push up through this old top. That could be volume created by trying to push up through here, the old top. That, at the moment, looks reasonably bullish. And if you saw, say you saw a red arrow appear, and immediately the next bar was tested, then that's definitely going to go up. Keep that principle in mind. Whenever you see a bull run and a red arrow appears, and the very next bar is tested, may not have a signal on it, but you could see it be a down bar, narrow spread, close in the middle, and the volume is less than the previous two. That means it's going up. So that could easily be bullish.
Okay, that was our last question, and that's it for this Friday. We should be back next Friday, which is the 20th of December. We're getting close to Christmas, and my husband hasn't bought our Christmas tree yet. But yeah, you should do. Anyway, so yep, that's it for tonight. Thank you for coming, and oh yes, we're going to do the newsletter on Sunday, hopefully this weekend. So look out for that, and we'll see you next week. Have a good week. Bye-bye.